Alright guys, so I promised to make a video explaining everything that I know in Forex. Okay, everything that I know about trading. And so this I don't know how long this is going to be, but hopefully this may be a part one, right? So first of all, this is the trading view platform. Okay. So you search trading view on your app store or your Google Play Store, right? Then you get this, right? So when you open TradingView, the first thing that you see is your watch list. Okay, the first thing that you are going to see is your watch list. Now, what is the watch list? The watch list is where you have your favorite pairs. Okay, you have your favorite pairs, and you can actually choose to you can actually choose if you want to add a pair, right? You click on that plus sign and then you search, right? So when you click here, you search for whatever pair that you're looking for, right? So it's as simple as that. So we have the stocks, we have the futures, the forex, right? So this is basically what you see on your watch list. Now we have to explain what is here. Okay, what are you seeing here? Now, first of all, we have the indices, right? We have indices. Those are the instruments that you can trade in forex, right? So in trading, right, we have the indices, okay? And then we have the commodities, okay? So we have the indices, we have the commodities, right? So when we say indices, right, what are the indices? The indices are pairs such as Dow Jones, right? And I don't know if you guys know Dow Jones, but Dow Jones is like, an industrial average, right? So US 30, I'm talking about this. See, US 30, US 30, right? And it is the combination of 30 industries, okay, in the US, right? And they have, strike an average of their index, right? Um, an average of, let's say their stocks, right? So each one of them, and then their stocks has been averaged and then put into one specific instrument, and that's the US 30, right? So when you go to the add here, we have the indices here, as you can see. So we have the S&P 500, right? We have S&P 500, we have S&P 500, we have the DSY, that's the dollar currency index, right? And then we have so many of them actually. So we have US 100, those are the indices. And now it is tradable. There are people that trade the indices, okay? So after the indices, we have the commodities. What are the commodities? The commodities are the gold, the silvers, the natural resources that the oils. All of them are being traded. Okay. So when you come here, right, they are mostly called the futures. Okay, the futures. So not futures actually. I kind of missed it. My bad. My bad. My bad. I've always struggled with this. Try to find gold actually. Uh, Let me search it. Right. So we have gold, okay, or let's say silver, right? Silver, USD. All right. So we have there they are commodity, right? I don't know why they don't have the option of commodity here, but then basically that's where it is, right? Commodity. So we have the silver, we have gold, we have oil, right? US oil, and then many of them. And we have the currency pairs. Okay, so we have the currency pairs such as Euro USD, New Zealand USD, Australian dollar, Japanese yen. We have the the British pound, Japanese yen, the USD, Japanese yen, and I believe that. if you don't know about how the pairs are arranged, right? So basically, let's take USD JPY for example. Let's take this one for example. So what you see here is that USD, how many of, okay, how much of the Japanese yen are you going to need to get one of the US dollar, right? So basically, the US dollar and the Japanese yen, that's what they're saying, right? So how much of the Japanese yen do you need to get the US dollar? And so that's what it's being quoted here. So you need 153.57 Japanese yen for one US dollar. And this applies to all the pairs, right? This applies to all the currency pairs that you see here. And you have the cryptocurrency, right? So this is Bitcoin Theta US. Normally other people use Bitcoin US dollar, but I prefer the Theta US dollar. I don't know why, but then that's what I want, right? Maybe I love the chart. So there it is. So that's the cryptocurrency, and I only trade BTC. I only trade Bitcoin and not the other cryptocurrency. We have the Ethereums. When you search here, right, crypto, right. When you come to crypto, we have you see we have the BTC. We have the BTC USDT here. We have the BTC US dollar, right? And they all come from, they are different companies, okay, that are giving you these charts on TradingView. So it's up to you to choose what kind of company. Normally it doesn't even matter, but then most people use especially from the crypto, people use Binance, right? People use the chart from Binance, okay. And so we have the Ethereums, we have the Sol, right? So we have the Doge. It's a lot of them, right? A lot of them. So you just have to choose which one that you want to trade, and then you just go about it. So now that we are done with the pairs, right? I didn't want to make it such a big deal. I don't know if I even took long. We now have to understand the chart, okay. So from understanding the currency pairs, you move on straight to the chart, because I mean that's the most important thing. And guys, you should pardon me with how my chart looks like. It's quite unfortunate, but then that's how I actually like it, okay. That's how I like my chart. So yeah, this is how I like my chart. Just black on white, right? White on black actually. So you should just pardon me. Now let's focus on understanding what the chart is, right? So when you see the chart like this, okay, when you see the chart like this, they are candlestick charts, okay. Whatever you see here is a candlestick, so every single one of them is a candlestick, okay. Every single one of these are called candlesticks, okay. And on videos on YouTube, because I've already explained this in one of my videos. If you missed it, I don't know, I mean it's on my Telegram channel. That's where I'm going to post this. You can download it from there, right? I explained the candlesticks patterns, right? All right, so what am I talking about here? Every single candlestick, every individual candlestick here, right, has a meaning, okay. And that's I don't think I want to talk about it here, because it's quite a broad topic too. But what you have to understand is that the candlesticks have openings. They have closings, they have the high, and then they have the low, right? So let's take this candlestick for an example, right? So basically, what this candlesticks means is that it's opened right there, then it came down here, right? And then it went up again, okay, until it went up, 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 went to that level and came to close here. Do you guys understand? More like this is what it did. It opened here, right? And it came down like this, right? And then it went up, okay? Up, and then came to close here. That's what it means, right? So then it means we have the opening, right? Okay, and then we have the lowest point of that candle. Okay, we have the highest point of that candle, and we have where it closed. That's the meaning of the candlesticks. Now, at some point, on some strategies, okay, that you might use to trade in the future, you need to know the openings and the closings of these candles. They are very, very important. And even in forex trading, actually, you need to know exactly when a candle closes and when a candle opens. It's really, really important because some people use time and price. Okay, in forex trading, most people use time and price to trade. Now, we're not going to go about that one here. So that's basically the fundamentals, okay, the basis of the charts that you see here. Now, I want to talk about the time frames, right? So this is a 4-hour time frame, right? But then let's start from the monthly time frame for you to understand something. So basically, what you see here, okay, let's focus on this one candle, right? Let's focus on this candle right there. Let's focus on this candle right here. What you see here, okay, what you see here is a monthly candle. And what does this mean? This means that the whole of the month, and we are in December 2024, so the whole of this December, okay, this is what the candle, this is the information that we are having, okay, for this month, okay, and this is the candle that's representing the whole month. And so what does that mean? It means that this full candle that we see here, okay, this candle that we see right here, okay, entails all the trading activities happening in December, right? Because it's a monthly candle. And so it means that all these candles that you see here, okay, every individual candle, okay, represents a month. Now, for you to know what I'm talking about, you can look down there, okay, and you realize that, right, from that December that I'm talking about, this is Monday, 2nd December 2024. Okay, when I move to the next candle, right, the previous candle, you see it's November 1st, 2024. The next candle is October 1st, 2024. We have 2nd September 2024. So do you guys understand? So every single candle on the monthly time frame, okay, every single candle on the monthly time frame represents a month. Okay, so then we move on to the weekly candle, right? And so what does this also mean? On the weekly chart, okay, on the weekly time frame, it also means that every single, okay, every individual candle, okay, every individual candle represents a month. And for you to understand this, let's go to the 1 month chart and then mark that month of December, okay? So let's mark this month. There we go. Okay, this is the month of December, right? This is the month of December. So let's go to the weekly time frame, right? So every single candle, right, in that month of December. And now today is 14th December. So it's like exactly 2 weeks, right? It's exactly 2 weeks, 14th December. So it's exactly 2 weeks. And now it being exactly 2 weeks, as you can see, we have two candles, okay, in that month. I mean, you saw me marking that month, right? So we have two candles. So we have the first week, okay, and then we have the second week, okay. So this is the first week of December, and that candle represents the second week of December. Okay, the market has closed, right? So today is Friday, and so we have to wait until Sunday 10 p.m. GMT, okay, until the market opens again, right? So that's it. Okay, so that candle, okay, this specific candle closed for the week. Okay, so every single candle, every individual candle, once again, represent a week. every individual candle that you see here represents what? A week. Did you guys understand what I'm saying? So now let's delve into that weekly candle. Okay, so I'll have to delete this, and then I'll mark this week. Okay, I'll mark this week. So this is a new week, right? Good. So going into this weekend, we have to go into the daily time frame. Now, in the daily time frame, once again, understand that every single candle, okay, every individual candle here represents a day. So the time frame that you open, okay, every single candle that you see there represents that time frame. Okay, so if it's a 1 day time frame, it means that every single day, that's the candle that was provided. Now I marked the weekly candle, right? What can you see here? As you can see, we have this candle for Monday, we have this candle for Tuesday, Wednesday, Thursday, and then Friday, which will close when the market opens, right? So when the new candle is about to be created, that's when this candle is going to close completely. But then we know that it's closed actually because we are down for the week. So we have, once again, we have Monday, okay? We have Monday's candle here. We have Tuesday's candle here. Wednesday candle, Thursday's candle, and then Friday's candle. Now, do you guys understand it? So this is what we mean by a time frame. This is what the time frames represents. Okay, this is what the time frames represent. Okay, so now I would have to go further down into another time frame. So I will have to go into the daily time frame for you to understand the hourly time frames too, right? So let's mark this candlestick out. Okay, and this was Friday's candle. So in Friday's candle, we go to the 4 hour. Okay, and what does this also represent? This also represents every single 4 hours, right? So how many hours do we have in a day? We have 24 hours. Okay, and then how many 4 hours can get you 24 hours? This is basic mathematics. I think it's 6, right? 4 times 6 is 24. So now we are going to count the number of candles right here. So we have 1, 2, 3, 4, 5, right? And then 6, if you can see this one, right? So we count from here. 1, 2, 3, 4, 5, 6. Do you guys understand it? So we have the 4 hourly candle. Okay, so the 4 hourly candle, every individual candle that is here, okay, represents 4 hours. Every individual candle that's here represents 4 hours. Right. So I hope you guys understand what I'm trying to put out here. Good. So in that case, it means that when you go into the 1 hour time frame, every single candle here is 1 hour, and you can go as lower as 30 minutes, as low as 30 minutes, 15 minutes, 5 minutes, 3 minutes, right? And even 1 minute, okay? And even 1 minute, right? And even 1 minute. We have the 1 minute candle here, right? Even 1 minute. So that means that every single minute, and people actually trade this time frame. Even sometimes I actually trade it. Someone might say it's a lot of noise and all of that, but if you know how to navigate your way around here, some people actually trade it, right? So we have, the 1 minute candle, right? So every 1 minute, a candlestick is created. Do you get it? So every single candle that you see here is representing a minute. Okay. So now let's get into let's go to 4 hourly time frame. And we have even seconds time frame, 30 seconds time frame too there. I'm not subscribed to trading. This is not premium, so I can't have access to that. You have to pay for premium before you get access to that. Okay. So now let's move away from here and get to, I hope you guys understand the time frames. I mean, this is not a live this is not a live video, right? I'm not talking to an audience that are responding, so I can't know if you guys understand it or not. But hopefully, I've actually talked about it enough for you to understand, right? So now I would want to explain to you guys what we mean by what you see on the chart, right? So whatever you see here, the types of the types of trend in forex trading. I believe that I've explained this in one of my videos, but for the basis of the market structure that we are going to have in the future of this video, I have to let you understand what we mean by the uptrends and the downtrends and the consolidations, right? So in forex trading, there are three types of trends. Okay, so we have the uptrend where the market is moving up, right? And we have the downtrend where the market is doing what? Moving down, right? And we have what we call the sideways, the range or the consolidation market, right? Where price is not really having any specific goal, right? So price is not really moving in a way that you can tell that this is price is going up or down, but it's moving in a sideways, right? So it's called a consolidation market, right? So we have where price is moving up, where price is moving downwards, and then we have the consolidation market. Now I'll explain to you properly later, don't worry. So with the uptrend, what do we mean by uptrend? What we mean by uptrend is that price is moving and giving us a series of higher lows and higher highs, right? So the price breaks structure and creates a higher high, okay? And it gives us a higher low that doesn't break this higher low, right? And then it breaks another structure. It breaks this one. That's called break of structure, okay? Breaks this one, comes here, right? So for you to understand it better, I would love to note this, right? I would love to put a minute, okay? Pardon me, right? So test. So we have, oh my bad, where did it go? All right, I think I would have to, add this to my favorite so that I wouldn't go there. So we have higher high, right? Good. So we have the higher high here. They're going to give me a chance to duplicate. I really want to duplicate this. Clone, good. Have another higher high. Okay, clone, higher high. Right. Okay. Uh, all right. So as you can see, we have the series of higher highs and the higher lows. So these are the higher lows. Okay. Pardon me. Okay, I'm taking much time to do these simple things. Okay. I beg your pardon. Clone. What's happening to me? Good. Let's clone this one. Good. So I took a while to do this. So we have the series of higher lows and what higher highs. Okay. So what we mean by a higher high is that price broke the previous higher high. Okay. Okay. So this one was broken. Okay. So when we say this one was broken, it means that price went above it. Okay, and then if price goes above a previous high, okay, if price goes above a previous high, then it makes a new higher high. Okay, so just like that. So that means that we are in an uptrend. And what will confirm for you most of the times is actually the fact that these higher lows are never broken. Okay, So in a higher high or in an uptrend, these higher lows, okay, are never broken. And by English, when you say higher lows, it means it's higher but then it's lower. Okay, it's higher but it's lower than the previous higher high. Do you get it? Or it's lower than the recent high. Okay, so these lows, okay, these lows are never broken. And so if these lows are never broken, okay, if these lows are never broken, that's what you can establish by saying we have an uptrend. And it's the same thing applies to a downtrend, okay? The same thing applies to a downtrend. So we have this, okay? That we have this, okay, a lower low, a lower high, a lower low, lower high, another lower low. All right. So as you can see, we have a lower low, okay, have a lower low, have a lower low, okay, good. So we have a lower low here, have another lower low here, have another lower low here. All right. So we would also have a lower high, okay, to establish that we are in the downtrend. Okay, you just can't have lower lows. So if you have lower lows, I mean you need to have a higher high, right? So we have lower highs, okay, lower highs, okay, good. So let me put them here. Right. Great. So now I hope you guys understand the downtrends and the uptrends. So in order for you to establish that we have a downtrend, okay, this lower low should be broken to make a new lower low. Okay. This lower low should be broken. And this lower high should never be broken. Okay, and then if it's broken, means that we are having a potential trend change. Okay, so we have another lower low here that needs to be broken to establish that we have a downtrend. And this lower high that broke this lower low, okay, this lower high that broke this lower low should never be broken, okay, because if it gets broken, that means the trend is changing, and then we don't have, or we are not sure that we have a downtrend anymore. Same applies to this, okay. So this lower low should be broken to establish a new low. All right. So this is what we mean by an uptrend, okay. This is what we mean by an uptrend, okay. An uptrend, okay, as in price is moving up, okay, and you have a downtrend. And if you listened carefully to what I said, I continue saying break, break, right? So if price does this, okay, if price comes here, okay, if price breaks this one right here, this high, if it gets broken right here, it's called break of structure. Same applies to this place. If this one gets broken by this, right, it's called break of structure. And same applies to this too, okay? They getting broken is called break of structure. Have that at the back of your mind. And so we move on to the consolidation market, okay, or the range. When we talk about the consolidation market or the range, it's whereby price is not really moving in a way that you can tell what trend it is in. So we're moving in a sense like this, as I explained later. I explained earlier, sorry. In a sense like this, okay. This is what we call the consolidation market, right? This video is taking longer than I expected. My bad. But then I knew it's actually going to take longer than I expected, by the way. So this is what we mean by the consolidation market. How long is it? 30 minutes. All right. So I mean, I hope you guys get what I'm trying to establish here. Okay, so I would love to end the video here, okay, for part one, right? So this is the part one of this video, okay, and then we will continue in the part two, which I'll upload very soon, right? Like I'll upload right after this. I don't want to take that much time. Okay, so thank you very much for your time, and this is mainly for beginners actually. So this is when you don't know anything at all, right? Thank you. I'll continue to make better videos, right?